day and welcome to National Mortgage Advice, 781-820-1745. My name is David Martinez, and that over there is Jeff Moore, and he's the man. He's the guy when you need a guy to get some mortgage advice. A good day, sir.
How are you today?
I am excellent. How are you doing?
I'm doing terrific. I'm sort of enjoying these little spurts of hot weather.
Yeah.
Although it looks like we're going to have a couple of cold days, 75 and 80 degrees.
Oh, man. You're a warm weather guy.
Yeah, I don't mind it.
Yeah.
I don't mind it at all. If I can get away at 4 o'clock and it's still, 85 degrees in the beach, then that's fine with me.
Yeah, can't complain. It's August. It should be warm. So what's going on in the mortgage advice world?
Well, the National Mortgage Advice, as you know, David, is essentially a bridge lender. That's probably 70% of our business, 80% of our business. And by bridge lender, I mean we can bridge the gap on credit issues. We can bridge the gap on timing issues. And we can bridge the gap on funds access.
Okay.
That banks often can't, because of their obligations to shareholders. They will occasionally allow a lower or a higher LTV, loan to value, than we will. However, they will take much longer, anywhere from 60 to 75 days to close a loan.
Why does it take longer?
Well, it takes longer because they have to have at least, and in not every bank, but in most banks, at least 6 months bank statements for personal and business. They also need a personal financial statement that sometimes is difficult for the borrower to put together because of their extensive holdings, or It's very easy and it's not much of anything. They also need 2 years tax returns that show that both income earners, what they're doing, what they don't. And they need a they need a credit application that, Fannie and Freddie, even for commercial, which is what we do, we don't do a lot of primary homes or refer them out actually. They need a credit report somewhere in the neighborhood of 640, 680 is great for them. I mean, we'll do credit reports down to as low as 540.
Really?
But if we do a 540 credit report, you've got to have a lot of equity, a lot of money down on the building, commercial building you're buying, or a tremendous amount of equity in the other building that we're cross-collateralizing.
Right.
And you got to have a good story about why do you have a 540? I got to, there's my neighbor has a Labrador Retriever, and I'm sure his credit's about 590, 610. So you got 540 or 580. It's like, come on. I know Cocker Spaniels with better report than that. You got to give me the story. So the story has to make sense. I was bankrupt a year ago. I've got all my business back together. Here's the bank statements. Now the bank statements show a tremendous amount of cash flow, and they have been paying their bills on time and all of that. You can see it from there. It's just that the credit report hasn't caught up to them.
Right.
So, or I'm in the middle of a divorce, but I need to do this deal because that'll provide the money for my ex, and my husband is going to start a new business.
Right.
So I need to get him off my back.
Everyone's got a story.
Yeah,
right?
Everyone's got a story. Everyone's
Everyone
got
does.
a story, and it's amazing. It's always amazing to me the number of women that are carrying the majority of the load with that. Not only with their children and not only with their primary home, but we're human, so everybody makes foolish mistakes.
Right. Absolutely.
So that's why the bank would say no. However, if the deal is correct, and the credit's not that important to us, but if the equity is there in the asset, or they've got 30% down, 25% down, 20% down, they got 10% down, plus they have another piece of property we can cross-collateralize, then we'll lend them. And even if they have no money down, but it's a tremendous deal because it's from their uncle or it's the lady down the street or whatever the story is, okay? Because the story is what makes my job pretty interesting. Whatever the story is, the $500,000 three-family house in Lynn that needs total rehab, but they don't have any money, but they've lived next to this woman for, 30 years.
Right.
And the house they own is also a $500,000 piece of property, but mom and dad, before the fellow took it over, they've been paying that off. So now they have no mortgage. So you have two houses next to each other, 3 families in Lynn, a very hot town, okay? And he can buy the one next to him, but he doesn't have any cash because he's the son that just inherited the 3 family that mom and dad paid down.
Right.
If you can follow that.
Yeah.
That's part of the story.
That's all part of the story. Absolutely.
All part of the story.
Absolutely.
So what we'll do is we'll come in and say, okay, here's the deal. We'll finance you 100% for that 3 family. However, we're also going to put a mortgage on the house that has no mortgage. So from his point of view, well, that's tremendous because the bank won't do that. And I say, well, yeah, no kidding. We know that. However, we'll do it, and we'll do it for 6 months, or we'll do it for a year. But if you listen to us, you'll be with the bank at a much lower rate. We don't want to be your partner. We're going to charge you a little more than a bank, but you're going to own this house now. And he says, well, I need $100,000 to rehab the 3 family that I'm buying. And we say, okay, we'll give you the $100,000. So he gets to put $30,000 into each one of those units. And maybe we give him 6 months interest. Okay. So now, totally, we might be at 63% loan to value.
Okay.
So our cash that we put out is 63% of the total value of this property if we sell it in 60 days. And we always have to think that way because, as I've explained before, we're not lending the bank's money. We're not lending the Fed's money.
Right.
Okay? We're lending our children's money. Now, whether it's all, very rarely do I do a loan. So I have friends that have family offices, or they've just got a big checkbook, and they join in. So, but they're all lending their children's money in respect because they're old.
Yeah.
I mean, they're old.
Yeah.
They're good. There's a lot of battle scars. There's a lot of economic experience. But we're lending, and we're fully protected at 63% if the worst happened. And you always have to think about the worst, especially when it's your kids' money.
Absolutely. Worst case scenario.
Oh, well, David, if it was you and I, could down to see the Indians in Connecticut, put $1,000 on red, get an adult beverage, and spin the wheel.
Let's go.
It's my money, okay? But if it's my children's money, that can't happen.
Yeah. That's
Okay.
right.
So that's what a bridge lender does. We'll bridge that gap, and we're much less expensive than a partner. I've gone through that before. You make $500,000 and your partner gets $250,000. With us, you make $500,000 on a couple of deals or on a deal, and maybe you walk away with $450,000. Maybe you walk away with $460,000. Well, that's better than $250,000 in my book.
That's a better deal.
I mean, I didn't graduate from Harvard, but I can still do that math. So that's what National Mortgage Advice. That's the majority of what we do is help people accomplish their goals while we protect ourselves.
So when you start this conversation and you do a bridge loan, the other end of the bridge is when this person can get back into the regular banking.
Sure, absolutely, and that's part of the service.
Right.
Okay, and we do the math with the people and say, yeah, it's going to be a little more expensive every month, but for 6 months we're going to lend you that, and in the end you don't have a partner, and in the very end, at the end of 6 months or a year, I'll take you to one of the banks where there are more old guys. I mean, I'm not walking you into a 26-year-old loan officer who has to, we're waiting for the big green light.
Yeah.
I'm walking you into a director of the bank or a senior VP or whatever the corporate name they want to give him. I'm walking you in to say hello to him, and he may or may not have all of his hair.
Right.
He's definitely got all of his sense of humor if he's dealing with me.
And he knows you, though.
He knows me for anywhere from 5 to 25, 30 years.
Right.
So you're walking into people that actually make the decisions.
Yeah.
When we sit down with them and say, look, we've had their loan for 8 months. Here's their cash flow now. Here's what it is. here's their updated bank statements, here's their updated either IRS extensions, or here's their tax returns. Their credit went from 540, now it's like 630.
Can it change that much in a year?
It will if you pay
will.
attention.
Oh, okay. Good.
Yeah, if you pay attention. I mean, oh well, I always pay my bills, but they were a little late. Well, you're not going to move your credit report with that. It's not enough to always pay your bills.
Yeah.
You pay your bills 2 or 3 days early, so there's no problem with the U.S. mail. There's no problem
With a
receipt.
EFT,
There's none.
yeah.
None of that.
Yeah.
None of it. I myself, my admin pays most of my bills on the computer. So we rarely will we send out an actual physical
Right.
bill unless I want a record of it or something.
I don't send any. I do EFT,
Yeah, everything.
everything.
So that's the situation there, and we'll take you in there, and believe me, we're getting you a no point loan.
Nice.
So it's, today I sent my neighbor over to one of the smaller banks because I don't do primary, and I said, "How'd you do? Did 2.95, 3%?" And she said 2.75, and I still love you. And I said, "Well, we better tell your husband about that." She was ecstatic. She was very excited about getting that kind of an interest rate.
Nice.
And we helped a fellow mortgage a 10-unit building, and with one of the smaller banks. And when I say smaller banks, I'm talking about I have a credit union that's capitalized to 125 million, which is I have investors that have that in their checkbook. So that's a very, very small financial institution.
And they're generally more conservative.
Right,
Credit
and
unions.
regulated by the federal government. But I also am sitting with the director of a $13 billion bank.
Mm-hmm.
So, when I say smaller banks, the $13 billion is probably is the largest one that I deal with often. Those situations are that they are dealing with the people that make the decision. I mean,
Right.
we sit down with these people. I walk them in, this, fine. When they say, "Yeah, we think we can do this," that's a 90%. Unless someone on the board knows that there's some horrible backstory to this client, that's a done deal.
Mm-hmm.
They've got to go through the process because they have to for their shareholders. Again, this is why it takes so long.
Right.
They've got to verify all of the paperwork, the bank statements, the IRS, the
that.
credit report, all that. So that's going to take some while to get it down to the underwriting department in there, even when it's coming from one of the directors or a senior guy.
Right.
And then there's the process. Okay, now we've done all of that, so that's usually takes about a week or so. Now we're going to set it up for the next board meeting. And some of the smaller banks, the $500 million banks or the $1 billion banks, the board only meets once a week or twice a month.
Right.
So if you get it on the wrong day, you're going to have to wait 13 days before the next meeting.
Wow.
So now you're already into it almost a month. And then they say, "Yes, we want to go forward with this." So the bank officer comes back and says, "Jeffrey, we need money for an appraisal, money for legal, money for title."
Right.
So now you go back to your customer, and you get told this on Monday. You go back to your customer, you chase him down by Monday afternoon or Tuesday, and you say, you write the checks out to the bank for this, this, and this. It'll all be credited at the closing, but you're approved. Okay, so by Wednesday, maybe Thursday, the people that have to get the checks, i.e. the lawyer, the appraisal, well, now they're going to make an appointment. Well, they're making an appointment. Well,
So
it's
this is
already
how it
Thursday.
all
It's
gets
already
stretched
yeah,
out,
it's already
right?
Thursday.
Yeah.
So now we're well into close to a month. So then we wait for that material to come back, and sometimes the appraisers are overwhelmed, and sometimes the lawyers get caught up in the title or there's a problem.
Right.
That's why it takes so long. Plus, they have to do all of this and verify it because the auditors come in and say, "Are you taking care of your shareholders?"
Yeah. Yeah.
So
Where-
that's one of the reasons that it takes so long. With
where are the
bank.
check boxes at?
Right, and that's it, and that's what we do. Like I said, probably 80%, 75% of my business since 1988 has been in that scenario.
Right. Hey, you wanted to touch on a Bloomberg article about there's been a lot of money rolling around in this country since the pandemic started for businesses, and I know that small businesses were supposed to get a lot of money.
But what we think. Yeah, I love the media. The media, small businesses, small
They got
businesses.
taken care of.
The small businesses are anything under 500 employees.
Okay.
Okay, now I know I'm certainly no big deal, but I think 500 employees is a pretty good sized
That
business.
seems like big.
Yeah, I mean, there's 413 people that work at the Southwick factory in Haverhill for Brooks Brothers. Well, guess what? That's a small business, that factory. To me, it takes me a good 4 minutes to walk from one end of the building to the other, and that's on the outside.
Right.
Okay, and then they've got 413 people working there. That doesn't seem like a small business to me.
No.
Okay, but that's how small businesses are judged.
Right.
And the reality is Bloomberg's telling you small businesses are not receiving business loans, but huge businesses, okay, not so much Amazon, but the ones between Amazon and Southwick, all of they've got the people on staff to fill in all the forms. They've got the
Right.
people on staff. The lawyer does this, the lawyer does that. It's called commercial C&I loans, and they're applying. So you got 1,500, 1,000, 4,000 employees. You're getting money to help you at a phenomenally low interest rate.
Really.
And Bloomberg says that's exactly what they're doing. And the mom and pop, the standalones, I mean, everybody from Wendy's on down is looking for money, and they're getting the money. Now you own a McDonald's 1 or 2 units. Well, you're not.
That's not huge.
That's not huge.
Yeah.
But you own 15, 20 of them. Well, now you've got upwards of 500 employees. So you can, as a entity, go and get that money, and banks are lending to it. Banks are lending that they're not lending they're not lending for business loans to Jimmy's Pizza with 9 units.
Yeah,
They're
that's
not
right.
they're not lending to a guy with 2 flags on his automobile, or he's got 2 stores and there's 4 different types of cars. They're not begging that guy to take money.
Right.
But Herb Chambers, they're throwing money at him.
Right.
They're throwing money.
Is
at
that
him.
just I mean, I know you talked about the company, they have more staff to take care of the applications and whatnot, but is there must be less risk for that larger small company than the tiny company.
The banks are how shall I say this? The banks are assured by the federal government that if they lend this kind of money, they're not going to lose. They're being protected because this is the pandemic. Business loan, keep up the economics, move forward, all of that issue. I mean, I believe that the rates are being held down for the economy to continue to look good.
Right.
You
Yeah.
know, and it's been artificially held down. Meanwhile, you're printing money, trillions of dollars. So the dollar doesn't buy as much, but you can borrow more because it's 2.75, or it's commercially it's for 4.79 or 5.25 for commercial lending, which is unbelievably low. But as time goes on, those dollars are going to be worth much less. So you're going to get an appreciation on your property or your business that to my way of thinking, it seems false, because all it is more dollars. It's not more quality. It's not more employees. It's just more dollars
Right.
to do the same thing. I think in the second podcast we did, I explained the Snickers index.
Yeah.
The Snickers index is, when I was a kid, the Snickers were 5 and 10 cents.
Yeah.
Okay, I got into my teens and early 20s, and a Snickers was $25. Okay, I mean 25 cents.
Yeah.
So now you pay $1.50 for a Snickers.
Wow.
And the reality is, it's the same. It's the same candy bar.
It sure is.
Okay. The only difference is now they have dark chocolate, as opposed to just milk chocolate. Mm-hmm. So by the time they get through printing these trillions and trillions and trillions of money, not only for this country but for other countries, your Snickers is going to be $2.50, $2.75.
Right. It
you
will.
know? And we know that the wages are not keeping pace with that.
Yeah.
So as a bridge lender, we can help people out.
Yeah. Yeah, you can definitely bridge and
So that works very well. Now we have some exciting announcements on the personnel front with National Mortgage Advice.
oh, excellent.
My friend Michael Hart is going to come over. He had over 40 years experience in commercial banking. We will be able to offer C&I loans.
Really?
Yes.
Great.
There's a minimum. You need, $100,000 is the minimum. But Michael has corporate experience within the banking system. He's learning about bridge lending, but he's there and he's going to be doing very well. I have complete faith in him. There was a time in my life when I used him as a banker and borrowed a substantial amount of money from him for our businesses.
So you have a nice, long-standing relationship with him and a trust level.
Absolutely. I'm taking him around to the small banks that I deal with probably in the next week or two.
Nice.
He'll meet everybody by September 1, but you can call me. I'll give you his number and if it's a C&I loan.
Cool.
Now, I also, very exciting here at the radio station, we're going to be advertising in Spanish on the
Nice.
Spanish station here.
Right.
So Jonathan Santiago, which has a lot of financial experience, he's new to bridge lending, and we have a couple of programs that we're going to be offering the Latin community or those that are more comfortable speaking in Spanish than
Sure.
English. If you do call and you happen to get me, then just be prepared. I'll give you the number, whether I can understand you or not. If it's strictly Spanish, because the best I can do is Spanglish, which may or may not be understandable.
Yeah.
But Jonathan is very fluent in 2 languages. He's fluent in financing, and he's a
Nice.
wonderful guy. And I'm looking forward to having him come on board. In fact, I believe Monday or Tuesday we'll be recording those
Commercials.
commercials
Nice.
for the company.
There's a lot of business in there, isn't there?
I believe there is. Jonathan's very excited.
Good.
I mean, he also buys property. He is a landlord at this particular time, owns a couple of buildings.
That's a benefit.
Yeah, and he understands the problems of the Latin community trying to buy buildings.
Yeah.
Or, we have this cash because I've got 15 landscapers working for me, but perhaps there's a difference between the check and the bank. But that's the American way.
Yeah.
So Jonathan can understand how to legitimize all of that, getting nobody in trouble and coming up to speed so that we get the person into a bank in 6 months to a year. The other issue that I wanted to make sure we go through is the rent and mortgage forbearance issue. It applies to most states, but I'm more familiar with Massachusetts than anywhere else.
Sure.
The forbearance is to October 4th.
Okay.
Now, commercially, when you took out this loan for your building, it's pretending you're David's a landlord,
Yep.
you own 2-3 families,
Okay.
and you took out the loan at 7%. And now you're struggling because everything you make at the radio station and everything your wife makes as a nurse is going towards supporting those 3 apartments or those 2 apartments that aren't paying rent because they're going, hey, we don't have to pay rent. We don't have to pay rent because we're going, we get $600 extra money. We get unemployment because we're out of a job.
That's right.
Or we're not out of a job and we still don't have to pay rent.
They're probably making more money than the landlord.
Right. So now you've got these 2 apartments and there's a couple of kids in them and maybe you're charging $1,500 or $2,000. I'll use the number $2,000
Right.
because $1,000 a month for a nice apartment with your own bathroom is not a lot of money.
No.
Especially inside of $495. So now it's 5 months. Now it's 6 months. Well, 6 months at $2,000 is $12,000. And you've got 2 apartments that aren't paying you. So you're owed $24,000. David, you and your wife are killing yourself to pay the 6% at the bank.
Yeah.
And you haven't missed a payment.
Oof. That's good. That'll
That's
help
the,
you.
Yeah, that's the good news.
Right.
So, and we'll get to the bad news. The good news is you haven't missed a payment, but you're getting killed.
Yeah.
But just as I just explained, the rates are low in the 4s, 4.5 or 5%, and you've created some equity in the buildings. You've owned them for 10 years or 5 years or whatever it is. you started out the rents were $1,200, and so now, if you go past October and God forbid you miss a payment, you're not going to qualify for a bank loan. But if you come to us now, we can tee this up so that sometime in October, boom, we switch you right to a 4.5%, 5.25% rate with a bank. Even though we're bridge lenders, we can bring you to a bank.
Right.
People say, "What are your rates? What are your rates?" I say, "Well, what is the deal?"
Yeah.
My
What's
rate.
the story?
What's the story?
Right.
My rates I have rates at 4%. I have rates at 12%. I have rates at 14%. Because the people have to pay right now, because somebody promised the money and they didn't, people have to pay right now in order to take advantage of a discount of $150,000 on $1 million property that the seller has to get rid of at a certain date certain. Well, my guys are like, look, we don't want to be your partners, and we're not certainly not going to step in and take the deal over, but we'll give you the money in 10 days.
Right.
But
Right.
there's going to be a premium for it because we know you're not going to keep it more than 90.
Right.
Because Jeffrey's already told us we got a bank lined up.
Right. Yeah,
So
absolutely.
they pay for a premium, but they still instead of getting the $150,000 discount, maybe the cost of those funds they get a $125,000 discount. Well, I don't like throwing away $25,000, but the reality is I got the deal.
Right. Yeah, that's right.
I got the deal. Now the bad news is that you have been missing. Your wife and yourself have been missing payments because you're not getting paid from your tenants.
Right.
Remember I tell you about the bad news. The bad news is you're missing the payments. So now you've missed 3 or 4 payments, and the eviction and the foreclosure, it's all over in October.
Right.
So if you've missed the payments and now you keep paying, you won't get foreclosed on. But God forbid you've missed 3, 4, 5 payments while the tenants aren't paying. Guess what? You're going to be foreclosed on. So you're going to need Jeff's bridge loan to get you back to where you're creditworthy again. So you don't get to foreclosure. There is no foreclosure on your credit. We give you the money. Sure, you got to pay a little bit more, but now all of a sudden your tenants are either out and somebody's in there paying the $2,000. And you can pay the extra interest for 6 months to National Mortgage Advice or one of our lenders. In 6 months, we bring you back to a bank where you've got 4% rate, 4.5% rate,
And you're on the other side of the bridge.
and you're on the other side of the bridge. You're on the other side of the story.
Yeah.
Now, before we wrap it up, I want to explain to you. As I said before, we lend in 43 states.
Yes.
Even the one that you're in. Audience.
Yes.
We got a call the other day from one of my friends in Texas and said, "Look, I got a deal in West Virginia. Do you want to lend bridge money?" I said, "Well, sure. Well, what's the story?" Because I'm looking for the story.
You want the story?
There's two mountains or hills loaded with coal, metallurgical coal, which
Okay.
is the best kind. Very, very hot, not dusty. We're going to be burning metallurgical coal forever. I mean, they're getting rid of the sulfur, high sulfur coal. And the reality is they need to borrow $1 million because they have a European Euro lender who's lending them $125 million to buy the 2 mountains, and they own the piece in between. So if they can get this loan, they're going to own the 2 mountains and the valley. So they're connected. And it's the gateway to a lot more acreage. So they offered us 3,000 acres with a $8.9 million worth of coal at a buck a yard, which is much lower than what they get paid. But that's how they appraise it in the ground. 8.9 million. First mortgage. We lend them $1 million. They'll give us back in 90 days $2 million.
Wow.
So that's a lot more interest than 14%, 12%.
Yeah.
But that's the deal they offered me. I didn't.
Really?
I didn't offer. I didn't say what the deal was. They said, "Look, we really need this, and we understand from our friends in Texas that you can close in 10 or 15 days." Well, I'm about 4 days into it. It looks like I have a lender. And National Mortgage Advice will participate in the overpayment, so to speak, by about 10%. So it's a great deal for everyone around. And these fellows have a irrevocable loan insured by Zurich Insurance Company if they don't lend, the major lender.
Right.
If they don't come through, Zurich will come through with the money.
Wow.
And it's in euros, so why would they pay such a ridiculous fee? Well, they pay a ridiculous fee because the euros are down. They're going to receive so much more in U.S. dollars because of the value difference. So they're in great shape.
That's awesome.
In great shape. And they said, look, this is what we'll pay. We need it now. And take advantage of, because once they make that $1 million deposit to the lawyers and to everybody closing the loan, then Zurich Insurance kicks in. They paid the insurance to Zurich. They paid the upfront cost to the lender, and the lender must lend, or Zurich will lend, either or. But they need $1 million liquid. And these guys are pretty sharp guys. They're cold guys. We've done the work on them. We've done way beyond LinkedIn. Pinkerton's
Yeah.
ran information on them.
Nice.
So that's what we're doing. But that's like the mystery loan that comes down the road
Yeah.
once every 2 or 3 years.
The stories that you can get.
So it's the story. Everybody wants, what's the story?
So what is your story? How do people reach out to you to find out more information about all the things we discussed today, which was a lot?
We did discuss a lot, and I hope that you put my phone number in the middle of that somewhere.
We did.
But it's 781-820-1745. You will speak to me. It is on this phone. I carry it with me everywhere. When I'm out fishing, if I do get a chance to stop at the beach to visit friends, that phone comes with me all the time. And if I can't, do not text, because the text does not come into my phone.
Right. Yeah.
But the phone, if I have to say to you, I'll call you back later, it's on the list, and I do call you back
He
later.
will get back to you. Absolutely. Jeff Moore, thank you so much for coming in today.
No problem. Appreciate it, David.
All right. We'll see you next time. National Mortgage Advice, 781-820-1745. Call Jeff Moore. He's your guy.